Well, welcome back to Mumbai. The Finance Minister has clearly presented a budget which salutes the honest taxpayer. There is much for agriculture, the rural economy, railways, infrastructure, huge spending allocations there. The question that we are trying to ask and hope to get answers to is, will all of this spur consumption and investment, much needed triggers for the Indian economy? Joining me to discuss that here from my immediate right, V. Ravishankar, founder director of Brickworks, the rating agency. To his left and my further right, Pranay Vakil, former chairman of Knight Frank and also chairman of his own consulting firm, Sanjeev Agarwal, CEO of Gitanjali Exports, Sunil Kapadia, Deepak Prem Narayan, president of the Indian Merchants Chamber, and finally Sunil Kapadia, partner at Ernst & Young. Thank you all for joining me. So it's been an interesting budget speech. The markets are obviously cheering because maybe they didn't get the negatives that they were hoping to get or expecting to get, and therefore there is a certain sense of euphoria and exuberance. The question that we should perhaps address is, what is it that you've taken away from this budget which has medium to long-term implications, which is either good or not so good, depending on where your vantage point is? So let's begin with you, Mr. Vakil, since real estate is a very critical component of this budget.
Yes, there are a few things which are done and there are a few things which have not been done, obviously. Because a lot of expectations on the real estate side which have not been met also. Starting with the affordable housing, which again needs to be fully defined, because the only way they've tried to define is to give the two areas of 30 and 60 square meters, for the 4 metros and outside of metros. Now, if they conform to a particular size, then there are certain benefits. You get classified as because you get certain advantages in interest rates and all that, and I think that's a very, very good move. Secondly, a very good move is on the capital gain side, where the way we compute a capital gain, you take a reference date of 1st of April 1981, hitherto. Now that date is changed to 2001, 1st of April 2001. Most of the appreciation in real estate has taken place in this 20 years.
Yeah.
So if you now take a reference date that is 1st of April 2001, the capital gains that you compute will be much smaller compared to what you used to compute before. So that's a great advantage.
What does that mean? So will I benefit or will I not benefit? Suppose I bought a property in 2004 and sold it in 2017.
As a seller, you will benefit.
Okay.
Let me give you this example. Let's assume that you have an old house which is 30 years old prior to 1981, and you sold it for X price. You were entitled to deduct the cost, a notional cost, which was computed with reference to 1st of April 1981. Now that notional cost is 1st of April 2001.
Right. So that means the denominator goes up?
Right. Okay. So therefore, the capital gains, which is the difference between the sale value and the notional cost, goes down, and therefore you pay less tax.
Right. But on the other hand, the finance minister has also said that you can now only wait for 2 years before you actually buy another place, or you have to buy another place within 2 years. Earlier it was 3.
I think that provision is regarding what you have bought. You have to hold on to it for 3 years. Now you need to hold on to it for 2 years. I think that's a great advantage. The thing is, unless you hold on to it for 3 years, the capital gains benefit on reinvestment is reversed.
Right.
Let's assume you made a mistake in buying something. All right. You stuck with it for 3 years. Now it's 2 years instead of 3 years, which is again a great benefit.
Right.
The area definition also has been changed, as you know.
Yeah.
The 30 and 60 square meters are now carpet area. In a city like Bombay.
I remember that was a question mark in the previous budget.
Absolutely.
Right. Okay, well, I'll come back to real estate in a moment. Let me get some more views. Sunil Kapadia, what's your sense? I mean, there's obviously disappointment with the big companies, but small companies should be happy, particularly Mr. Prem Narayan's members.
No, absolutely. I think the provision of charging corporate tax at 25% for MSMEs companies, as we say, whose turnover is 50 crores, up to 50 crores, is definitely a benefit. And I think it's part of, these are the companies which were really got impacted when the demonetization happened. There was a fall in the demand, and so it's sort of helping them to sort of, if I may say so, recover at least some part of that from a reduction in the tax rate. And I think the other thing that is likely to happen for the small businesses, that the presumptive rate of taxation, which was 8% of the turnover, is getting reduced to 6%. So that also I think will help small businesses. So I think there is a lot for small businesses, whether they are corporate or non-corporate. So I think that's the other advantage. There is also, of course, a disappointment that, the overall corporate tax, which everyone thought, we'll at least get some direction of, a reduction in the corporate tax rate, as promised by the finance minister in the last budget.
Yeah.
We have not seen anything on that front.
Yeah, and there was a timetable.
There was a timetable that it will happen up by 2019, and it was on that basis there was going to be a phasing out of deduction. So that's not what has come. So I think that's a big disappointment for corporate India in that sense.
And I'm going to come back in a moment for a fine print. Yes, Mr. Prem.
I tend to have a slightly different view. On the SME sector, I'm looking at it more as a broader thing. Firstly, the relief is very good, one. I don't think it's been done to pacify because of demonetization. There are two aspects to it. Last 3 years, this is a sector which has been actually contributing most to the economy. It has been, actually I wouldn't say rocking, but 2 years ago it did 24% growth, one. Point number two, demonetization had an impact for a short time. The Indians had a formula called Jugaad. Credit came into place and stuff like that. So digital technology, all that fell into place. And this is because my members, we have 250,000 enterprises that we reach, 86% is SME, MSME. So at the end of the day, it isn't to pacify. It is basically to encourage manufacturing. It's in that perspective. So this has to do with the government's philosophy, and it's confidence boosting. The other things also that have happened as affordable housing, to brand that as an infra fund, the hack that you got, that's a damn good thing. You got first time taxpayers, one-page form. There's a time limit that's been set. All these stack up, then governance-wise, political parties now got to conform. You've got to have an annual return that you file, and how the monies that come into it. So overall, I rate the budget on behalf of the chamber as a good budget.
What would be the one word that you would use, that you would use to define this? Is it transparency? Is it cleanliness? Cleanliness of the tax system or the administrative tax system?
I would say governance coming into play.
Okay.
Yeah. And I'm actually concerned, because I would rather put it this way, maybe in the next couple of weeks you might hear of an interest cut. I'm not saying, I wish there could be, because you look at the impact of demonetization, what has it done? I'll give you a point in case. This is a carpenter that I have in Kulaba. He's a frame maker. And this guy has 6 people working for him. He does about 1 lakh a day. Till the 1st of December, he didn't have a bank account. 3.5 crores, he's come into the net, and there are lots of people like this. Now, what is the consequence of this? This strengthens Jaitley's hand to come up with schemes that he has come up today. Because there's going to be a whole lot more tax collection, indirect tax collection. And that's going to lead to reduction in interest cost. Because that's a big concern with the government. The banks have not been passing through. The repo rates have just been held back, and the banks here not passing through.
But if, as a banker's hat, a very quick question, I want to come to these two gentlemen. If you were to wear your banker's hat, would you feel that there is sufficient liquidity to actually bring down interest rates? Or
as a banker's hat, currently there is currently, but it's not going to be sustained because it's going to move out into the system. But I might like to add here, I would have expected a little more on the banking side. We require $300 billion for Basel III, to conform with that in terms of capital. And what we have today is 10,000 crores, which is just less than 0.5% that's been put in. Because
I think with a commitment that more can come if need be.
It won't be possible.
It won't be possible.
It won't be possible because the banks, firstly you need to separate the good and the bad banks, because what's happening is it's affecting the valuation of the banks overall. So once you segregate the bad assets, what it does is the actual dhanda can carry on with the good bank. They can do their lending, they can do, valuation improves. And today you look at HDFC, ICICI, who are the major investors? You've got foreign companies, institutions, 80%.
Right. Okay. Let me get a few more views. Sanjeev, from an exporter's point of view, someone who is working with an informal sector as a jewellery company.
Well, in terms of the overall objective, long-term objective, it's a very good budget. You've touched upon all the positive points: agri sector, rural sector, irrigation, road, railways. allocation to agri sector going up by 24%, all those are fantastic. But they'll have a longer term repercussion and benefit to the economy over the next 3, 4, 5 years. Even affordable housing will have a longer term effect. But what also is required is kickstart the economy of the slowdown of 0.5%, 1/4% or 1%, whichever way you see it, whichever political position you want to take. It needs to kickstart. And the budget had the opportunity, but it lacks that element to kickstart the economy in the manufacturing sector, in the private sector, in the export sector, in the sectors which have a higher level of employment generation, like apparels, like the gems and jewelry. So that's lacking.
Right. So, but from your industry's point of view, would what is happening internationally matter more at this point, or for that matter at any point, than perhaps domestically today? Or to, I mean, let me put that question differently. Could the budget really have done much for you?
Yes and no, because a strong domestic base helps in a strong export market. Today, the gems and jewelry sector, many people don't know, is an $80 billion market, of which roughly 50% is domestic, 50% is export. It involves employment generation for 50 lakh workers, potential to double, is recognized as a major producing center. One of the few recognized made in India sort of position is held by the gems and jewelry sector, but it needs that impetus now to move towards the organized way of doing things, and similarly other retail sector needs the same
And
impetus.
are you feeling any lag effects of demonetization as an industry?
As an
people who work for
industry,
you?
yes. As an organized player, surprisingly no. We've seen a growth in sales. In the shop and shops and in the formal sector, we've seen a growth in sales, not a decline.
Right.
But the person who's on the high street has seen a drop in sales.
Okay.
So it is changing the dynamics of the market substantially.
Right.
The budget was expected to give it a kicker to go to the next level of reform.
Particularly consumption.
Very quickly,
Yeah.
with your permission.
Ah.
Yeah. You know, I'm not looking at this budget. On a daily basis in our country today, you are having something happening. Demonetization was like a mini budget, the UPI, etc. But I think what's important is that on a macro basis, you talk of credit rating agencies. You take Western Europe, there are a whole lot of countries there. They're doing nowhere compared to what we are doing as a country, and we're rated poorly than them.
Right.
So overall, these steps that are being taken governance-wise, etc., ease of doing business, which is not recognized, will add to our rating.
Okay.
As a
As a
result,
medium to long term. Okay. I'll just come back to you in a moment. Ravi Shankar, sorry. Tell us, I mean, as you look at the balance sheet of this country, what do you see?
My first impression is the direction for both medium term and long term seems very good in the budget. Of course, a lot of expectations in the air regarding some kickoff for the short term. I think to that extent, recovering from the so-called demonetization impact, I think whatever the best that can be done is already
So let me ask
initiated.
you, I mean, let me put this question differently. Suppose you were to look at the last 3 budgets and then look at this budget and say, is it continuity? Is it sort of does it build substantially on what was presented earlier? What is the path?
There's a lot of continuity there. Well, the first example we can say is talking about the fiscal discipline. I think the finance minister has clearly stuck to the target of around 3% of fiscal deficit, which is very good. And similarly, the tax to GDP ratio, which the committee has suggested for 60%, he wants to stick to that requirement. I think these two are very, very, at a macro level, it's very good approach from the budget. As far as in terms of similarly on the taxation side, I think more or less whatever has been articulated at the beginning of the 5-year budget, he has also been honored to. So I would say the direction is pretty good in terms of consistency and approach.
Okay. So what was your big expectation? And I'm going to put this question to all of you as well. What was your big expectation, and what did you actually see or not see?
I think from a rating agency perspective, what I thought was you have this existence of this twin balance sheet problem. On the one hand, you have the corporates having a high leverage. On the other hand, you have the bankers sitting on NPAs. So whatever we have created in terms of regulations related to the bankruptcy and then easy recovery of loans, etc., the regulations are in place. But what is more important is the way you have a target for, let's say, credit growth in the agriculture area. We don't have any targets for the industry, because if you look at our composition of GDP, industry is constituting very small percentage, whereas that is something which we need to take off in a big way. And also it is very much lagging compared to the estimates. So in order to ensure that there is recovery in the industry, I think some sentiments which are required to boost the growth there is very much required. I think nothing has come. Whatever initiatives that are there for infrastructure or other aspects will certainly benefit the economy in the long run and the medium term.
Right. So the big investment
Climate is still
box has not been checked properly. So let me come back to you. So what's the fine print, if any, that you picked up in this budget so far?
I've not been able to pick up
Yeah.
the fine print because the notes and clauses in the finance
Have come
bill
late,
were just
yeah.
getting
Yeah.
downloaded as I was leaving my office. But I think 2 or 3 things which at least I've come to know. So one, of course, is that we had this issue of how the book profit tax 115 JB MAT would apply for companies getting into Ind AS scenario. So we had this report which came from the high powered committee from CBDT, and there was that apprehension that if you do a fair valuation of investments and plant property equipment, that would get taxed. So I think that fear has been allayed, I think, by a specific provision saying that there is no intention to tax that. So I think that's a big and that was very, very important because companies would have to move to an Ind AS transition in the current year. So I think that's a big one. I think what we were also expecting is that we will do away with ICDS, the Income Computation and Disclosure Standard, because this is a year where CFOs of companies are sort of really have to work on Ind AS and GST and ICDS, Companies Act changes, etc., etc. So that, I think, was a big demand. And anyway, the ICDS was not going to give a very major boost to the government in terms of tax revenue. One could have sort of, just done away with that, because it only adds to, more and more accounting and more record keeping.
Right. So I was talking to one of your industry colleagues in the morning, and his point was that apart from the tax, wishes, the larger issue was that of obviously administrative reform, or the administrative response to tax issues. So he talked about tribunals. I mean, I don't know if that covers tax. The second thing is, did you get a sense that there is more continuity now, that there is a tax vision, which is what your industry colleagues have often been asking for?
Sure. I think the government seems to be continuously on the path of giving clarity and certainty on taxation. I mean, the last 1 year we have seen they have solved, the mystery around Mauritius Treaty, Cyprus Treaty, Singapore Treaty. These are all right steps. GAR guidelines were expected. I mean, they have come. We may not like some of the items in those guidelines, but yes, they are there. So at least now, if there is more representation, perhaps we can get better results out of that. We didn't have the POEM guidelines, the place of effective management guidelines, till almost January, and those are there. Of course, one would have expected that if the guidelines are coming in January, the provision should get deferred by 1 year, because how do people really comply with that for March 17? So I think so some of these things which the industry, which I think all taxpayers were expecting, I mean, those seem to be misses. I mean, unless I have missed out in terms of the fine print. So I think these are some of the items which should have sort of addressed.
Right.
On the personal taxation, of course, people were expecting that the limit should have got increased from 2.5 lakhs to at least 3.5 lakhs, which has not happened. But yes, there is at least a 50% reduction in the first slab from 10% to 5%.
Right, and the finance minister also, presented a lot of statistics on who's not paying tax, including the 20 million who fly out of the country.
The point really is that you have to catch them. The 20 million are merrily going abroad. They are buying cars. So why don't you catch them? Why are you sort of putting extra burden on people who are already filing a tax return by increasing the surcharge for taxable income from 50 lakhs to 1 crore and continuing the 15% surcharge above 1 crore. I mean, so it's like those who are already in the net, let's squeeze them. I mean.
Yeah. So it's a super rich.
Globally, what's happening is the gap between the haves and the have-nots is increasing. Now, as a result of that, there is going to be discord. I believe the step taken in this 10% surcharge, when you're in that kind of an income bracket, 2.5 lakhs is not going to kill my back. That's one. So I think the stance is a little different than the previous budgets. It's a little more oriented towards people of the weaker section. That is one. It's oriented towards governance and confidence boosting. That's the important message that's coming out. And I'm delighted that as a chamber, we pushed for certain things, and they've been accepted. For instance, setting up this board at RBI, which is to do with the digital platform, because that was getting neglected because of the cartel that exists very comfortable with the RTGS operating 7 hours a day, whereas this will be 24/7 in terms of actual activity. And point number 2, on the negotiable instrument, the dishonored check, that also we fought for that because SMEs get hurt on that, and that's a big issue. So that's...
And there's a lot of announcements on payments infrastructure, customs duties reduction, and the digital part, which we've not really talked about. Okay, let me come back in a moment. Sorry. Yes, Pranay Vakil.
Yeah. Talking of the fine prints, there is one item which possibly nobody is talking about, and that is a deemed income that a developer will suffer if the flat which he has constructed is lying idle for more than 1 year. There will be a computation done with reference to the ready reckoner. A percentage of that will be added to his income. So it's a complete disincentive for him not to sell. He will have to download that in the market, sell it at whatever price it is, otherwise he'll be exposed to some taxation. That's one thing. Talking generally, I think possibly the next move that you are going to see in the US is a reduction in the tax for the local manufacturer and a destination tax coming if the US companies are sourcing the products from outside. Okay? This was a golden opportunity to our government to reduce the corporate tax such that you become more competitive with the US companies. Otherwise, you are not going to prevent the outflow of work going back to US.
Yeah.
The only way you could have kept it back is your tax rates are more favorable than the US.
Right. So actually that's the question, and let me ask Sanjeev this as well. Actually in the run-up to the budget, the question that I was asking is, what's going to happen post-Trump? And obviously Trump in the last week itself has surprised with so many executive orders which have a direct impact, if they play out, on global trade, on companies, on trade. So what's your sense? I mean, should the budget have, there was a mention...
Definitely, there was an opportunity to address exports, address the issue about potential barriers being put up by the US market, which is our largest export partner. So that was an opportunity. And the fact that if you have identified that the taxpayers are that small cluster of people who are the honest players, why are you penalizing them with the extra levy? You give the benefit across the board, both to the corporate as well as the individual. I think that was the budget numbers, the lack of pressure in terms of fiscal deficit, etc., offered that opportunity, which in a way was wasted.
So what's the theme that you're driving at? Are you saying that this was a budget and an opportunity to make India Inc. more efficient, more competitive?
Absolutely.
Okay.
And kickstart at the short end rather than only looking at various investment for the future over the 3-5 year, where the benefit will only accrue over a 3 to 5 years basis.
Okay.
There was an opportunity for kickstart the present across all the sectors of the economy, which seem to be lacking.
Okay. Ravi Shankar, and then I'll come to you. Do you agree, disagree?
I think one of the other aspect is people were thinking of this IT sector particularly, which is contributing to the largest export for the country. And the sudden issue related to the Trump announcement, how far it is going to impact. There's a mixed view, of course. One is that generally IT companies have a 80-20 model where 80% is offshore and 20% is on-site model. So that may be tilted towards 90-10 instead of 80-20, it will maybe 90-10. That being the case, still there could be an exodus of people coming from other countries back to India. There's a greater challenge because on the other hand, you are generating so much people from schools, MBA schools and IT background.
So you're saying this sort of
scenario, we are not prepared for managing such type of issues. So even though there are a lot of positives in the budget, on the other hand, we are also getting impacted due to challenges in the global environment as such.
Okay. So, is there a feeling that this could have mentioned or talked more about jobs, this budget, or do you feel that all the investment that's been promised...
I think that is something they may have to wait, because I think the industry body like NASSCOM and all would do a round with US-based government.
Yeah, no, I don't mean just IT, I mean jobs in general.
Well, I would look at this way, if I was the CEO of the country, I wouldn't have a knee-jerk reaction on the basis of what China would just do one day or what the US would do. I've got to have a policy which is sustainable, because I'm operating with 50 different countries. One, you made a very interesting point on properties. I think what's important is that the Benami Properties Act, which has been dormant, they need to really push that because of the cash element that is there in property. So today, there is a price you declare in the reckoner, and there is a price at which you register, and if the government is unhappy, they acquire the property. They should put that into force. I believe that's starting to now wake up. So they're doing
That
things.
used to be there earlier.
It was dormant.
Yeah.
You had the Credit Guarantee Trust also, which was dormant, where you could give, there's a insurance cover on loans given by banks to MSMEs, SMEs. It was covering the risk premium, and that was not being sort of utilized. But today it's being pushed. That's another thing we claim credit as a chamber. Please forgive me and this thing, but we do actually, because I'm only concerned about interest costs for my people. And Credit Guarantee Trust does that. This Benami Properties Act, likewise, and there are others also which have been lying dormant. There have been good acts like that, but I'm glad the government is waking up, because, Govind, the ultimate objective is, I do not know to what extent, there is to be a cashless society in the next 3.5, 4 years. You know,
Right.
I personally don't see credit cards existing. It's a strong statement to make,
Yeah.
but I may not be around to
We
that.
hold you to that, yeah. So, Sanjeev, the jobs question, and you're in manufacturing, perhaps the only one here in this space. So, what's your, if you were to look a couple of years ahead, do you see your industry expanding in terms of jobs, becoming, or is it on the other side actually becoming, less job intensive or less labor intensive?
For the next year or so, we'll go through a churn, because, like I said, the middle sector is suffering because of the demonetization and so on and so forth. The organized players are growing because they anyway had all their business on their books. They would invest further to grow the market, both for domestic and exports. So to that extent, overall there will be a dramatic improvement, but there is a short-term pressure and churn if you look at the overall sector. Which needed to be addressed, is what I'm trying to say in the budget. But there are very many other gems in the budget. For example, looking at the collections by the political parties, trying to address it finally in some way as a starting point, or the fact that on the spot commodity market, setting up a committee to address it, because it's a very funny situation in India. You have a very active forward market and not a spot market. Normally you start a business with a spot market which is transparent and then move to forward. Here we are the reverse. And the reason is because there's no organization which is responsible for it or is accountable to take it forward. So those are important things which will spur many other changes taking place.
Right.
So there are many more like that in the budget.
Right. So, Pranay Vakil, what's your sense? If you were to look a few years ahead, I mean, do you see this either being the foundation or continuing to be the foundation for a very strong, growth trajectory for real estate, construction, building?
Well, like I told you earlier, I mean, something more could have been done, but I think we seem to be on the right track. The issues are getting addressed one by one by one. Black money being the most important one, which is getting addressed. You can't overnight kind of wipe out black money, But this limit of 3 lakhs, which has been proposed now, that you cannot do a transaction in cash for over 3 lakhs. All the transactions in real estate, even in the secondary market, would come to a standstill, which is good, because then they will be forced to change to the check economy. So I think we seem to be on the right track. There might be a few disadvantages in doing things very, very early also. So let it sink in, let it kind of take its own course, but over the next 2-3 years.
So, you feel that the market could actually slow down a little bit now because people are not able to get their hands on cash?
Well, actually it has already slowed down because of the demonetization. Now, what we have already seen is some revival. More so in the office market than the residential market, but the revival is very much there. So with that, maybe by March, we'll be coming to more or less the even ground.
Right.
Interest rate reduction being the biggest factor, because the EMIs have gone down with that.
And an expectation that it might dip a little further.
8.65%. I mean, you can't imagine, because these people were paying over 10.5%, 11%.
Right. But in 2004 it was 7%.
Yes.
Yeah.
But believe me, we have seen the best volumes
Yeah.
when it was 7.5%.
Right.
And it's beginning to approach that.
Right.
So again, if it touches the 7.5%, then you'll see the best volumes ever.
Right. And you say that, I mean, you feel that we may be
We are on the right track.
trending towards that.
Best of the bad job.
Right. Ravi Shankar, from a balance sheet point of view, do you think banks can move towards that?
I think some of the sectors like infrastructure, etc., is likely to do well. And banks, when they are having certain issues related to lending, possibly they will focus on sectors which can have immediate growth and prospects are good.
Do you see fiscal stimulus here to bring interest rates down?
Yeah, the interest rates down is certainly a good development for manufacturing companies to borrow at a higher rates. But on the other hand, you are already sitting on a situation where they already have a leverage position which is very high. So effectively what is going to happen is the good companies will continue to do better, and the companies which are currently reeling under pressure, I think there is something beyond that budget what they need to do, work out a strategy for the growth.
Right. Okay, let me come back to Sunil. So, couple of, if you were to look at a 2 to 3 year outlook, what's the tax path that we are following? What's the pending tasks?
So I think on the tax part, or if you were to look at the administration side, I think there is going to be increasing use of emails and SMSs. I think there is already an announcement that even in respect of people who have deposited money in their bank accounts, I mean the income tax side is going to show against your PAN number what are the deposits made. The inquiry is going to come via an email or an SMS, and you are required to respond by email or SMS. So I think the interaction with the tax officer is likely to get minimized. And I think we are already seeing some signs around that, I think. So that's on the administration side. I think increasingly government is keeps on giving this message that, you know, we don't want to get into this situation of taxpayers getting harassed. I mean, I think we are seeing that,
Yeah, and
we are really seeing that,
commitment.
and there is one more. So I think the government is reiterating that position, I think. So that I think that's good for the taxpayers, I think. The third point, of course, is the dispute resolution mechanisms that are there. So, for example, I think I did read that there is going to be a combined authority for advance ruling for direct and indirect tax, and there are going to be more benches. Of course, the benches, the increase in the benches was announced at least for direct tax AAR a few months back, but we have not yet seen those additional benches. But I guess I think that should be in the offing, I think, very soon. So I think more and more we are seeing, as I mentioned earlier, steps being taken towards getting certainty and clarity in taxation, which I think is good. That's what I think every foreign investor, every MNC wants to invest in India wants. Yes, we could have done better in terms of, giving benefits to exporters to sort of meet, counter the, the likely fall that we may have in the export sectors because of whatever policies, our protectionist policies are getting sort of implemented globally. But also I think there is increasing interest, as I've seen, coming from clients to even do high-end, KPO type of establishments in India. And if we had the right tax rates, the corporate tax rates anywhere between 18 to 22%. I mean, that's what we have seen as the average tax rate in economies like Philippines, Thailand, and those who are likely to compete with us for establishing those types of centers. If you see steps around that direction,
Governments and so on?
everywhere, everywhere. I think that's what I'm saying. I think the overall corporate tax rate, if it is in that range, and I think the government, of course, has carried out studies to say that the effective tax which companies pay after considering deductions, etc., is around that range, between 20 to 23%. So therefore, and if that, even whether you get a deduction or you don't get a deduction, if you are able to get that tax rate, I think it's going to be a win-win situation, both for employment jobs, for increasing the economic activity, and it will definitely help us to have much more skill development of people who are in the jobs and who are seeking jobs.
Right. So let me pose a slightly larger question. So the budget had, I mean, if you look at the cumulative expenditure in the budget across infrastructure, agriculture, so many schemes, including down to Narega, which has been, I mean, which is the highest ever allocation. What's the, and let me put this question to you, Mr. Prem Narayan, first. So what's the cumulative impact of that going to be in your estimation in coming months? And where?
Look, the impact of that will start particularly in the rural economy. But to me, the biggest take on this one is, if I might come back to the original thing, it's got to be a danda and carrot economy. And you can clearly see that it's heading towards governance, and what it does, that people like Ravi will then rate my country better because of more governance, transparency, ease of doing business. So the danda factor has been announced by Jaitley, and which is coming into play, which he said about compliance, non-compliant officials.
And that we've got the data, we're watching, mining it.
So the carrot part is in terms of the reduction in tax, is in terms of the participation with the economy, and I believe we are very competitive globally, because we can come down to 18%, but overall with experts like him, if we do our deductions, etc., we're down to about 20%.
But I think the point Sanjeev was making earlier was that there are a lot of medium to long-term measures, but I think the expectation was that could there be some short-term
Govind, we have a budget every day. No, I'm serious, I come back to that. we shouldn't look at this as that I'm married to this once a year. You know, I'm married on a daily basis. You've got Suresh Prabhu, in the morning it's bio toilets, in the evening it's Wi-Fi, and next morning it's 400 stations, this is happening. Next day it is Surat coming up with 3 towers of 60 stories each, and underground parking and